Madam, start the next.
Mishra ji, let's go live.
Sir, चालू कर दिया है. Aditi madam, start करो.
Yes, Aditi, start.
Yeah. Hi everyone. Welcome to the program on ESG audit and ecosystem for corporates. I would like to welcome CA Manish Gadia sir, Chairman WIRC, our honorable speaker for the evening, CA Shailesh Haribhakti sir, all our participants today, CA Piyush Jalandhara sir, CA Anil Rander sir, CA Sumit Kavit Gadia sir, and all our participating members for today's session. Before commencing our session, let us start with ICAI motto.
Yaesha supteshu jagrati Yaesha supteshu jagrati Kamam 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 Purusho nirvimanaha Tadeva shukram Tada brahma Tadeva amritamuchyate Tasmin lokaha shataha Sarve tadunatyati kaschan Etadvaita
To address today's session. Sir, over to you.
Aditi, I didn't hear. Sorry. You want me to commence or?
No, CA Manish Gadia sir, to address today's session.
Okay.
Okay. Thank you, Aditi. CA Shailesh Haribhakti Past Chairman-WIRC, and today's faculty, Anil Rander ji, Sumit, Piyush, Harit, all the faculties and panelists. It's really a great pleasure to interact with members, and I am very happy that on this topic we have a good number of registration, that is ESG audit, which is the future, I should say. Today what we are seeing is sustainability reporting, and we are talking about only bottom line, that is profit. But now the trend has come that we are talking about triple P, that is profit, people and planet. But the time will definitely come in near future that the planet will come first. If planet will be there, then only the people will survive, and if people will survive, then only you will get some profitability. So now it is very much needed to know and conserve our planet more and more, and what best we can do for our planet and for the people to have a more profitability. That is what the ESG and the sustainability reporting means, and that what we are going to discuss today, and what will be the future of the same. So we have a host of faculty who are going to take us through all these things today. I will not take much time, and we'll go directly to the faculty. Before that, I request Aditi to take it forward. Over to you,
Sure.
Aditi.
Thank you so much, sir, for your address. Now I would like to take this opportunity to introduce and welcome our legendary speaker for the evening, Mr. Shailesh Haribhakti sir. Thank you, sir, for coming today. A man who has worn many hats in the corporate world and raised standards of various organizations so high that people consider him a serial innovator, pioneer, teacher, speaker, author, analyst, entrepreneur, and the citizen of the world. He is a chartered accountant, a cost accountant, certified internal auditor, a CFP, fraud examiner, Sir now seeks to create enduring value for companies he is involved with by being a deeply engaged independent director. He is a global thought leader in the area of ESG and has helped pioneer impactful concepts like IR and innovating path to net zero. He is also a well-known thought leader on Indian economy and public policies. He is an ex-TAC, ESG, and IR evangelist. He is an author of 2 books, namely The Digital Professional and Audit Renaissance. Sir is very hospitable by nature and has been involved with various philanthropic initiatives. Thank you so much, sir, today for gracing our event with your presence, and it is our absolute pleasure to have you. Before sir is going to speak today on the topic of importance of ESG and a sustainable business driver. So without taking much time, over to you, sir. Welcome, sir.
Thank you very much, Aditi. Manish, other members of the Western Regional Council, everybody present on this call, my dear friends and colleagues in the profession. I think it is very perceptive of WIRC to launch this, what I would like to call, movement towards making all of us far more relevant. I was so happy, Manish, when you talked about the 3 Ps of planet, people, and profit. And you're right, planet comes first. And let me share with you why planet comes first. If you take the last 65,000 year history of the world and think about what made our planet habitable, then the thing that will strike you in the middle of your eyes is that we were able to maintain temperature within a certain range for 65,000 years. 65,000 years. Climate, the temperatures would rise and they would fall. Rise, then they would fall. This happened in a very gentle cycle. There was no GDP growth for about 62,000 years of those, maybe more, maybe 64,500 years. No GDP growth. It was all barter, straight line. Everybody was in a battle to survive. And who survived? The species that was most adaptable survived. But it's very important that there was biodiversity. There was a flowering of the species, and they were interconnected. There was a symbiotic relationship between various species, which kept our world alive. And then we reached an inflection point some 200 years ago, when we launched the Industrial Revolution. And what happened then in the last 200 years is, while the range was here, today I can't stretch my arm enough to tell you how we have damaged the ecosystem that preserved us, preserved life on Earth for 65,000 years. It is what is now known as the Anthropocene age, when we took out so much from our planet and polluted it so much by simply releasing carbon at a pace that the world cannot tolerate anymore for too long. We are on a short time fuse. If by 2050 we do not bring the temperature in such a control that we do not exceed 1.5 degrees Celsius increment, then the habitability of our planet will come into question. So it is an existential problem, whether we will as a human race be able to survive and live and continue to live on this planet. It is as critical as that. And let me tell you 3 or 4 reasons why. We have lost so many species that the delicate balance has been disturbed. We don't know how the loss of biodiversity that we have engineered, because we have pushed pollutants into the air, into the water, into the soil, into the earth, everywhere. And what that has done is it has annihilated, made extinct a vast number of species that existed on this planet and disturbed the eco-balance. Then what we did was we extracted minerals and we polluted because we used fossil fuels. And initially, without knowing the damage we were causing, we just emitted pollution into the air. We released the chemical residue into bodies of water from which we were actually taking sustenance without realizing it. And then when we realized it and the regulations came in to protect us from this damage that we were doing, everybody sought to find a way around those regulations, because the driving notion was profit, scale, more out of less, until the earth gave up. And today we are at this tipping point, which I mentioned. If all of us, the entire planet, and in this we are all together, every one of us as the human race is in this together. If all of us do not pledge to maintain the incremental temperature to up to 1.5 degrees Celsius by 2050, we'll be done as a race. And we would have brought it upon ourselves. Is it possible to change this? Yes. And why am I convinced that this is possible? I'm convinced because technology has given us this amazing ability to discern, to make choices, to figure out what is material, to figure out how we can do massive energy transition, how we can deploy completely new methodologies to move goods, to move people, to just simply make commerce happen. We have discovered the holy grail of digitalization, and we have implemented it in varying forms, varying degrees, across the length and breadth of all our corporations and all our governments. Today, data is actually the new empowering force. I never like to call it oil, because when I think of oil, it reminds me of carbon. And my motto today is I want to make sure that we discover not net zero strategies, but gross zero strategies. We should not make a single investment, not take a single step which will increment our carbon footprint. That is the message, central message, that I would like to leave with all of you on this call today. Let's all work towards that. And it's all a matter of mindset. It's a question of how much more do you think your children and your grandchildren can suffer from asthma, from diabetes, from all the diseases which are known to be air and waterborne? How many of you would like to continue for COVID forever? That is the question we need to answer. And that should be the driving force for us to take action. Reporting and auditing comes much later. First, you have to understand this basic fundamental, and you have to start taking action. You need to remove, every time you buy a product, think about the packaging that it needs to be wrapped in. And think about whether you could have avoided that packaging altogether. Whenever you buy something from a particular location, think of where you could have bought it so that it did not have to travel all those miles to get to where it is, where you found it. Start thinking about this. Start thinking about producing whatever you need on a palm top. That's what technology can and will deliver. Just as we are doing all our data manipulation of a device, we are able to speak to each other because of this device which all of us have. Similarly, all your production can be unitized. And this is what Ray Kurzweil wrote in 2015 about the singularity, which will happen because information, nano and biotechnology will combine to enable production in units of one of what you need, when you need it, on a palm top. That was Ray Kurzweil's vision. And as I hear him every year, I see that this singularity is coming nearer. And that's what gives me hope for all of us. Because if we are able to harness this technology and we jump into the action mode now, we need to act now. No time to lose. And there is a multitude of actions that we can take. Reduce, and everything that you do and everything that you can encourage has meaning. Switch to wind power wherever you can. Switch to solar power. Support the thrust to green hydrogen. You can have green hydrogen dropping the cost of generation of power to even below the cost of solar power. The marginal cost that we have now discovered is even better than fossil fuel. So to produce 1 megawatt of electricity from coal is today more costly than producing the same megawatt out of solar. This is what technology has delivered and scale has delivered to us. One of the biggest projects going on in the whole world, committed in the whole world, is a solar project and a wind project in the run of Kutch. It is a spectacular, visionary project which will make gigatons of energy out of solar and out of wind. That is the action we need to take. The entire budgetary process of the government of India, I had written about a year ago, must be driven entirely by the 17 SDGs that the UN put out. 193 countries got together to agree on what the 17 SDGs ought to be. And what happened after that? For 1 or 2 years, there was a bit of excitement, tamasha, people put it out on various photo ops and all of that, and then everybody forgot about it. Until the pandemic struck. And all of us got riveted to this notion that we need to take charge of our lives, take back charge of our lives. And that's the message that I would like to leave with all of you very deeply. Make every small change that you can generate. Transition out of fossil fuel. Commit never to buy an internal combustion car again. Commit that you will get infrastructure to support recharging of batteries everywhere. Why shouldn't every petrol pump in our country have an EV charger? Why not? If Ola can think of making two-wheelers at scale and sell 1,000 crores, of course they've got just a fraction of it as a deposit and big hullabaloo and press and all of that. But usko mila hai 5-7 taka uska. But he's got commitments to 1,000 crores of EV vehicles. So कहीं ना कहीं इंफ्रास्ट्रक्चर बनेगा. कौन बनाएगा? हम सबको बोलना पड़ेगा अपने क्लाइंट को कि आप बनाइए. हर एक पेट्रोल पंप में एक ईवी चार्जिंग मशीन होना चाहिए. बैटरी को रिचार्ज कहां करेंगे? हाईवे पे लगना पड़ेगा. पूरे इंडिया में होना पड़ेगा. इंडिया हैज द second largest road infrastructure in the world. We've got more roads than Europe. Whole of Europe. We are the 12th largest landmass in the world, but we have the second largest road network. And we have, again, the second or third largest rail network. But so we need to start thinking macro, micro, action-oriented, sustainability-driven actions. And then look at what this will challenge all of us with. We will have to stop doing data entry completely. The whole idea of filling in a voucher, सब हम सीखे थे ना, ledger, एक straight line, debit, credit, voucher, entry, इसमें डेटा डालो, फिर करेक्ट करो, 3 आदमी को देखना पड़ता है, मेकर चेकर प्रिंसिपल, ये सब हम लोग सीखे. सब ऑब्सोलीट हो गया क्योंकि अब there is no need to do any data entry. It's the biggest cause of fraud. It's the biggest cause of error. You need to have automated systems which will capture data sets. And these data sets have to be captured so that you can distinguish them into 6 receptacles, which represent the 6 capitals of integrated reporting. If this was a classroom, I would have tested you all if anybody can tell me the 6 capitals, but I'll not do that. I can't do that in this medium. It's not interactive enough. But the thought that you should carry in your mind is that you need to track physical capital, social capital, intellectual capital, human capital, and financial capital in order that you can then report. But if you do not have data set capturing mechanisms and processes embedded in your systems, and this is what chartered accountants can do. And Sunil, to your point, this is what will enable us to save the world finally. If we can empower every moving, interacting piece which is generating these data sets, give up that data set. Now you can measure with drones, you can measure with IoT devices, you can measure with sensors, you can measure with so many different things, cameras, and you can multiplex. Just as a human being has 5 faculties, we have created in the digital world all these 5 faculties to be able to track and capture data sets. And the thing about data sets is that if you don't capture it, it's lost forever. तो चला जाएगा, कभी उसको पकड़ नहीं पाओगे. An interaction has to be caught when it is happening. कोई हाथ से टिल से पैसा निकल रहा है तो उसको कैमरा पे कैप्चर करोगे तब उसको रोकोगे ना. वो कर ले उसके बाद आप ऑडिट करोगे, फिर कोई रिकंसिलिएशन करेगा, फिर कोई उसको रिव्यू करेगा, फिर बोर्ड बैठेगा, फिर ऑडिट कमेटी बैठेगी. Too late. It has to be caught right there. So everything will have to happen in real time. And you'll have to create the mechanisms to capture these data sets, which will enable you to do the accounting along 6 capitals, not 1, and do an auto reconciliation so that greenwashing is avoided. आप बोल सकते हो अपने बड़े brochure colored, ये Pricewaterhouse will give you all the advice how to make a great brochure. But the point is that there can be no greenwashing, no tolerance to greenwashing. We have seen that Volkswagen lost 60% of its market cap simply because they cheated on emissions. We have seen many examples of companies which at some point in time have given up because their market cap just got destroyed. And that's the reason why we as chartered accountants must take up this challenge. We will allow only accurate, at source recorded data sets to enter our reporting systems, so that at the end of the day, we do not have to manipulate that data to show a particular result that you wish to show. But you will report because that's the natural thing that has happened to your 6 capitals, and you can see it. So here's my first big proposition for the profession. We need to create an ERP for ESG. Yesterday. Okay. And I'm working with a few youngsters who are actually doing this, and we will perfect it in maybe the next 3 months, 6 months at the outside. Very important. Second thought, we need to actually have the Netflix of sustainability in place. So show the action. आप बोडोलैंड में चले जाइए, Assam, North Assam, on the border of Bhutan, 4 kilometers away from Bhutan. Bhutan is heaven on earth, right? 4 kilometers from there is Bodoland, जहां झगड़ा, मारामारी, violence, lack of productivity के सिवाय कुछ नहीं मिलेगा. Now, how do you transform that and make it what is there 4 kilometers away? That's the challenge. That's the challenge that we can address through clean, concerted, dedicated attention to getting the SDGs implemented, capturing the value in the 6 capitals, putting it into the frameworks. Look at how much the world has progressed in 2021. Forget anything else. This year, on 1st June, the GRI and the SASB merged to create the Value Reporting Foundation out of New York. Michael Bloomberg is the chairperson, and Judge Mervyn King is the co-chairman of the Value Reporting Foundation. So the world has come together. And as you know, Mervyn actually initiated the integrated reporting. So the 6 capitals framework is likely to get embedded fully into the Value Reporting Foundation's final output, which will enable all economic interests to consume data, which talks about how every one of the 6 capitals has been incremented or decremented by your actions. Now just imagine what a beautiful framework it will be. It doesn't matter whether you're a financier, you're a financial services guy, or you're a cement company, or whatever you are. The framework will be standard throughout the world. This month, the International Accounting Standards Board has given birth to what the chairman of IASB called our little sister, the International Sustainability Standards Board, ISSB. ये दोनों acronyms को आप बिल्कुल याद रखिए. Value Reporting Foundation, and therefore one framework for sustainability reporting, and one set of standards, the ISSB standards, which will drive the whole world. To anticipate all of this, the Big Four and the World Economic Forum got together last year, again in September. I don't know, some fondness for the month of September over here. They put together this wonderful framework which drives the whole sustainability accounting and reporting framework. And this is publicly available, so all of us have access to it. You might want to read an article we had put out on it and talked about a few tweaks which might make it a very viable framework. But beyond that, I think we will have within 2 years, and I quizzed IASB and Mervyn and all of them when we had a chance to ask the questions as to when do they expect these standards and these frameworks to come into place. And I was astonished to hear that within 2 years, the world will have a single standard and a single framework. Our BRSR has anticipated all of this. BRSR is a very good segue to Value Reporting Foundation. And it recognizes that in the BRSR framework, that those who are already onto GRI or onto SASP can simply do the mapping between BRSR and the global standards and frameworks, and actually do the reporting on the 6 capitals. And then you're done. Your sustainability report will pop out from there. So remember, the key thing is to get into action today. BRSR and all of this that I talked about is at the fag end of it. And then you need assurance. So you need an auditor to go in and make sure that the materiality criteria has been properly chosen, the framework is fairly implemented, the standards are used, the data sets are collected, they are sort of driven into the 6 capital framework, the outputs are dependable, reliable, accurate, and so they assure it. Now you can believe इसमें greenwashing नहीं है, आप इस पे depend कर सकते. That is the new profession that is emerging. And that is the profession that all of us should practice. And that is why I was saying just before we started that the accounting and auditing world as we know it is over. It's obsolete. It's already, we are living in the past. We need this new framework. We need it yesterday. But that's the fag end of the actions that all of us need to commit to. So let's commit to action. Let's commit to compliance, and let's commit to reporting, and let's commit to making sure that we as a human race can continue to exist. Thank you.
Thank you, sir.
Okay, so if there are any questions, I'll be happy to answer. And if you all have been too stunned by what I said and too shaken up, then I'll let you recover.
I think Aditi, you're on mute. We can't hear you. You were trying to speak. Are you?
Yeah. Oh, okay.
No, we
Okay,
can't
am I
hear you.
audible now?
Yeah.
Oh, thank you so
Yes,
much.
you are. Yeah.
Thank you so much, sir, for such an insightful lecture. And I personally loved your ideas on less data entry and more of value and sustainability reporting. Also the fact that you're working on this ESG ERP is mind blowing. I mean, I got to learn a lot. I mean, for the first time that even CAs are so aware and we are working in the climate change direction is amazing. So I would like to request Mr. Kavit Gadia to propose a vote of thanks now.
Thank you, Aditi. I, CA Kavit Gadia, on behalf of WRC of ICA, I would like to thank CA Shailesh Haribhakti sir for taking out time from their busy schedule and enlightening us with their knowledge. Sir has given a very informative insights and taught us the importance of ESG. Sir also told us about the history of our environment and also how we as a human damaged our planet. He also said how we can start ourselves, the use of technology in reducing carbon print. Given a good example of solar and the windmill project going on in the Kutch, which will save our environment and also save some cost we are spending on coal. Sir has also given a good guidance to us that how we can go ahead in hand and the birth of ISSB International Sustainability Standards Board. So let's commit to this. We are pretty sure. I think the precious knowledge that sir gave us will definitely help us. Thank you, sir. Thank you, Aditi. Please take over.
You know, I use this mug to drink water from. It has the 17 SDGs all over. So every time I drink a little bit of water, I'm reminded of the 17 SDGs. All of you can adopt that. Maybe WIRC should create a mug like this. This is public property. All the best to all of you.
Thank you. Thank you, sir.
Thank you.
Moving on, after this wonderful session, I would now again request CA Kavit Gadia sir to introduce our next speaker for the evening. Piyush sir, welcome. And over to you, Kavit.
I would like to invite and introduce our second speaker of the session, CA Piyush Jalandhara sir. Now he will clear our doubt on the subject of ESG. Piyush is a risk advisory partner with PwC with over 17 years of experience in assurance and accounting. His experience spans a wide spectrum of businesses, India and global, with varied industries, including multiple startups. His primary focus is on technology, logistics, and infrastructure sectors. His experience includes working on risk management, process transformation, and internal audit. He has also advised clients on their accounting matters and has been involved in multiple capital market transactions. He is now leading the ESG agenda from markets perspective within the assurance practice for PwC. Now, I don't want to waste the time, and I would like to hand over the stage to sir, so we can hear some more from sir as much we can. Over to you, sir. Sir Piyush, sir.
Yeah.
Piyush, you're on.
Thanks, Kavit. Are you able to hear me?
Yes, sir.
You're able to hear?
We can hear you.
Sir, for PPT, sir? Yes, sir.
Piyush, there's a lag between the voice and the, the audio and the video, I think. That's the only trouble. Otherwise,
Okay.
we
I
are
can
able to
flash
hear you.
the presentation while Piyush can speak. If you can just give me access to present. I think it's visible.
Yeah, it's a difficult task to speak after Shailesh is already. So I'll just make an attempt for next 30 minutes to walk through on this topic. in terms of what is ESG all about, just to give a context in terms of getting into more details, and then why it is becoming relevant, other than what Shailesh talked about in getting into specifics on those, and then also getting into more details in terms of the reporting side as well. Ira, can you put the slides?
Subhash or someone, if you can just give me, yeah, I'll just show.
Sir, Hirak sir diya.
Yeah, we are able to see the slides.
Yeah.
Hirak, we can move to the next slide. Yeah. So as I was saying, in terms of these are the 4 topics in terms of what is ESG, why it is relevant, and if you have to start on this journey, typically for any of the corporates, what is the journey how do you start on this? And then in specific in terms of the reporting considerations around it, some of the ones which Shailesh talked about, BRSR, GRI, IR, I will be covering some of those in bit detail. Yeah, next. So talking about in terms of normally the language which is used generally, ESG, clearly ESG standing for environmental, social, and governance. But quite frequently we hear in terms of different terminologies which are used, which is regarding corporate responsibility, sustainability development. These are the various terminologies which are used in placement to ESG, but generally more or less in terms of they all talk about in terms of what are the non-financial factors which are driving companies in terms of their decision making, as Shailesh was talking in terms of from a not restricted to the profit side, but from a qualitative perspective, what are the factors which are driving the decision making under the ESG umbrella. Yeah, Hirak, next slide. Yeah, this is journey in India in terms of how where we are on the ESG journey and where it all started. So it started quite early as far as India is concerned, in terms of starting from 2009, 2012, we had a amendment with respect to the SEBI guidelines where BRR reporting was made mandatory for top 100 listed companies. A lot of elements which you see in the BRR reporting is a subset of what is required under ESG or reporting. So that's 2012 was when SEBI made it mandatory. And then in 2014, we had CSR amendments where corporates were made mandatory to spend certain amount of money and then do related disclosures. That's got added to the end of the S element. Then you had this 100 companies requirement extended to 500. And then later on in terms of now in 2020 and 2021, we have in 2020 the BRR reporting was made mandatory for top 1,000, and in 2021 we have the BRSR reporting which has been made mandatory. So if you see the journey, India is kind of catching up with what is happening in other territories, and we are very much in speed in terms of what are the best practices which are followed in terms of non-financial reporting in other parts of the globe. Yeah, Hirak, next slide. Yeah, this is just to talk about in terms of what does E, S, and G, what does it include? So the boxes you see on the screen, these are called ESG matrices, and this is something which has been adopted by WEF. These are the WEF matrices, and under E, S, and G, you have various elements which are covered. So under E, largely it's all about climate change, not natural resources, pollution, waste. This all gets covered under the E element. Then under the S element, you have human capital, product liability, stakeholder position, social opportunities. So CSR, which we have all been used to the term in the previous years, this all falls under the S umbrella. And then you have the governance element, where anything on the board, ethics, managerial remuneration, tax transparency, corruption, anti-corruption policies, these all are falls under the ambit of governance. So this is how the E, S, and G element comes together. So each company, each corporate need to identify what is material for them among all these matrices, and depending upon that, start measuring those and start reporting on that. So this is how the journey starts on the reporting. So here, this is an illustrative example which we have put up for a consumer retail company, in terms of, you see the complete value chain of a retail company, starting with first raw material procurement, then you have the manufacturing, then distribution, then sales, then collection, and the use and disposal. And then if you try and identify the E, S, and G element in all of them, there are various elements which cut across all the processes. So if I have to just pick up example on raw material extraction processing, you will have climate, which will get impacting towards the agriculture. Then you have nature, then you have water use, which will again get impacted from an irrigation perspective. Then once you will manufacture, you will have pollution which will get generated. Then related labor which will get deployed to do the manufacturing, that will get covered under the S element. And then you have related taxation which will be paid at any point of time, that will get covered under the G element. So the message in terms of in this is clearly it impacts across the organization. It is not something which is an area to deal with only with the finance function or with the tax function. This is an area which impacts the entire organization. So any company starting on this journey on a reporting, this will involve multiple stakeholders in the entire organization to work on. Yeah, Hirak, next slide. Yeah. And then what is driving it? Why suddenly this has picked up, right? While it has been always relevant, but what is driving this in terms of where companies have started working on it, companies have started reporting on it? There are two big factors which are driving this, other than the other three which we have put on the slide. So the two big ones, first is the investor community. So investors have gone and committed that they will be investing only in companies which are more ESG compliant, and they have committed as part of the UN PRI commitments that this is the area which we will invest. And in the coming moderation session, you will hear more about this. We have two panel speakers coming from this background in terms of what we are seeing from the investor background perspective. Then coming to the next driving factor is the regulators, like what we are seeing from SEBI BRSR being made mandatory for top 1,000 listed companies. Similar action which we are seeing across the globe, and with regulatory action kicking in, it is impacting the entire ecosystem. So companies are forced to start acting on it and start reporting on it. And then you have the other three elements like the consumers, which are more demanding on using sustainable products. Then you have human capital, that the employees wants to work with companies which take care of employees, which are diverse. Diversity, inclusion is something which they promote. So talent is another area which is there, and then the wider community which is driving this. Yeah, Hirak, next slide. Yeah, this is just to again stress on in terms of some of the surveys which were done to test in terms of consumer awareness, their buying preferences. So if I have to again see from an FMCG sector perspective, some of the surveys which were done. So clearly more than 80% of the consumers gave a feedback that they are ready to change the brand against what they use if the product is more sustainable. So so clearly consumers are changing their preferences, like what Shailesh gave an example on plastic which you use, right, in terms of any waste which we generate. So clearly consumers are ready to change their preferences if the product which they are buying are more sustainable. Then on the investor side, in terms of something which we called as UNPRI registration, where investors go and commit to this body in terms of what kind of investments which they will do for ESG compliant. So here if you see the graph here down in terms of the number of investors which we have gone and registered and committed under the UNPRI framework is substantially increasing globally, and in India also we see this trend picking up with multiple funds. It's a matter of time where everybody will just go and commit here. Yeah, Hirak, next slide. So this is a map just to tell in terms of actions which is happening across the globe. And while in India we talked about from a SEBI BRSR reporting perspective, one very important amendment from SEBI perspective again, which drives the same message in terms of its relevance. So in May 2021, SEBI has come up with an amendment with respect to risk management committee, wherein the responsibility which was defined, which was asked from a risk management has much widened now. And one of the requirements which they have come in as part of that amendment is, as part of risk management framework, there are certain risks which mandatorily are required to be reviewed by the risk management committee, wherein ESG risk is one of the risks which has been called out in the amendment. So other than cyber risk, business continuity planning, you have ESG risk also being there. So clearly this will now become part of the board agenda as part of the monitoring of the ESG risk as well. So talking just about the various geography, US, Europe, everywhere the reporting requirements are getting mandatory to report on the ESG parameters on non-financial reporting. And what will happen consequential to that, many companies who are like more a supplier to these companies who are global companies, they will also get impacted by this whole supply chain mechanism, because their commitment, their disclosures get impacted down the line to the suppliers as well. So like auto companies, somebody who's working for say a BMW, Volkswagen globally in India, they will also get it. They will also have to work on this side. Yeah, Hirak, next slide. Yeah, this again a messaging in terms of not only from a compliance perspective, it is relevant what we talked about, but from a value perspective from a stakeholder. So when SEBI had come out with the BRSR requirement, they also analyzed as part of this process in terms of companies which are high on ESG agenda, how their stock valuation has moved over the years vis-a-vis the Nifty performance. So if you see the graph in terms of the spread of the between the companies which part of the Nifty index and as well as the Nifty ESG index, the spread between both of them have been increasing. So clearly companies which are high on ESG agenda are attracting more premium as compared to the normal Nifty index. So that again drives a message in terms of the value which it brings in is reflected in this. Yeah, and some of the examples where companies have not acted upon it. Here, next slide. In terms of clearly, we see multiple examples across the globe where that has resulted in significant erosion of the values. The example which everybody would be aware is the Coke example, where Ronaldo just moved the Coke bottle against the water. So it resulted in the valuation going down by 4 million. And then there was an IPO which failed because of low ESG parameter on that, where because of the messaging which was turned towards the employee part in that. So similarly multiple examples which we see now, and if you see the recent IPO roadshows which happens, so you will find elements of ESG in those documents as well now. Yeah, next slide. Yeah, so this is something in terms of which is called as ESG rating. The way you have credit ratings based on financial parameters, we have something as ESG ratings as well, which is what investors look for. So many of the companies you will see in terms of have already been rated, which is something which is called as involuntary ratings. So like CRISIL had recently come out with their report for 250 companies in India in terms of their rating. So rating is one important parameters which is driving companies to work on its agenda and starting early as well. Yeah, next slide, Hirak. Yeah, this chart, this snake diagram kind of puts out if somebody has to start on this journey, then how do you start on it, and where do you go finally, right? So typically, as we were talking, starting first is in terms of doing a materiality assessment in terms of what are relevant KPIs for you. the first chart, WEF matrices, which we saw, identifying those what is material for the company, what is that from a sector perspective, from your peer perspective, which is typically called a materiality assessment. So you identify those relevant KPIs. Or when you will do that, typically we see companies see that they are already working number of areas which they are working on. So mapping those initiatives on what is material for you. Just to pick an example, if you're talking about human capital, then what is the kind of policies around diversity, around inclusion, the kind of policies for leave, the POSH policy, the policies around that, and what are the kind of from quantitative numbers perspective also driving what are the changes which are there. So you map what is relevant for you and then map the initiatives which are there, and then basis which you start working on in terms of building up the whole plan on the material KPIs. And then the ultimate journey is over the process starts with the reporting at the end of the year as part of the annual report. So biggest challenge, as Shailesh was talking about, is collating the data which gets involved in the reporting aspect on the non-financial parameters is the biggest area which is there, because CFOs are used to getting all the data from the ERP where all the financial numbers sit, but the non-financial numbers which is outside the system, like things like what is the kind of energy you have consumed, how many male, female members you have, all those data gets resided outside the system. That's where the challenge happens on the reporting part. And once you have reached a certain maturity on the rating on the reporting part, then the rating then you can go and apply for get rated yourself. So this is a typical journey which goes through in terms of starting identifying material KPIs, what you are doing, and then it goes to the reporting element. Yeah, Hirak, next slide. And this is again an example in terms of which we have tried to capture on if a company when has identified those relevant KPIs from E, S, and G perspective. So if you see from an E perspective, what will be relevant for this companies in terms of renewable energy, and then you have 100% EV electrical vehicle, then use of plastic, then travel, when you travel that gets added to the E element, then use of paper, like one of the companies, logistics companies we were talking to, you have bill of ladings generated, so reels and reels of papers which gets generated every month. So they are working as part of the ESG agenda. They identified reduced use of paper as one of the relevant KPIs. And what as an initiative they ultimately did was stopped all the manual, and they have moved to a online platform where the bills of lading, all the related documents get issued through online mechanism. So similarly on S elements, if you see, you have something on the human rights and labor, then workplace diversity, then on the governance you have on the with respect to the corporate governance, then transparency in the financial process, board diversity, aligning remuneration. You see a lot in media now, multiple cases where remuneration approvals have not been given for increase. So the idea is in terms of mapping those metrics and then identifying what could have impact from a value perspective, and then also on an ease of implementation. There could be white spaces where nothing has been done but would be relevant, and starting on that journey. So this is where as a community we can play a role in terms of helping companies to work on. Then coming to the reporting part, yeah, next slide here. Yeah, so coming to the reporting part. So here the way we are used to seeing accounting standard, auditing standards, company law. So here as of now it's a mixed bag. You have too many reporting standards, too many reporting frameworks. So if you try and understand this, you get a bit confused in terms of where to start with. And so what is happening is various territories in terms of, like in US you have SASB, GRI, which largely acceptable. Then you have something like CDP, TCFD, which is more from a climate perspective. So various frameworks coming with different background and addressing various stakeholders is what the situation is as of now. So that is where in the last year WEF came together. All these bodies came together and came with a common metrics, which is what I highlighted in the initial slides, and the Value Reporting Foundation, where the two big frameworks have come together, which Shailesh was talking about, to bring something which is a globally accepted standard for reporting on non-financial parameters. But this is a journey. It will take some time in terms of for the next 2 years on how to come with a common standard. But so far, till the time it happens, largely acceptable standards which we see is something which we have flashed on the screen: GRI, SBTI, CDP, TSCFT, SASB. These are all acceptable standards which are used in various places. Yeah, here, next slide. So talking about in specific in terms of some of this material reporting standards which are there, the big ones in terms of GRI, SASB. So GRI is something in terms of which focuses on impacts on overall society, overall impact. SASB is very specifically focused on issues which impact financially the company. So it looks at it more from a lens of financial investor. So if something which impacts your financial statements, what is the relevant ESG issues with respect to that? But GRI is largely more societal focus, or it covers the wider aspect. And then according to the intended use, GRI is more acceptable use across all the stakeholders. SASB is largely investor focused, which is there. And then you have the IR integrated reporting framework and CDP, and then you have SEBI, which is BRSR, which brings it together in terms of on the reporting framework perspective. Any company which is going for integrated reporting or GRI reporting, they need not do the BRSR reporting. That's the option which is available. So whenever you start on the journey in terms of where do you start on non-financial reporting, start referring these standards. So like SASB has standards for 77 sectors. So when you go and search, say, a software company, you will find material KPIs under the SASB, which are material KPIs for a software company. Similarly, auto, retail, you will find those. So among the 33 matrices which was there, what is relevant for any company, if you go and refer, you will find those matrices. But again, you need to make a choice in terms of seeing peer comparison, what your peers are doing, what are the stakeholders asking for. Putting it together is what you define the framework which you want to work on. Yeah, here, next slide. Yeah, so talking in specific of BRSR framework, as this is something more relevant for us from an India perspective. So you under BRSR, the requirement is you have 9 principles where the disclosures are to be given more on quantitative as well as qualitative, both the aspects. Certain numbers are to be given for while it is mandatory from 23, but certain numbers also has to be given for previous year. So that's the reason a lot of companies are starting like a dry run for 22 and then going for 23. But like HDFC report, if you see, they have already disclosed under BRSR framework for March 21 itself. So as a reference point, you can see the HDFC report, you will find there. So broadly, this BRSR is divided into these 3 sections, which talks about, one is the general disclosure, then you have MD&A, and then you have principle-wise disclosures, which is there. Go to the next slide. So here we have tried to capture the 9 principles, what kind of data requirements which will be there from, that is where the role as the community which will have, and we will have opportunities to work with companies. So if you see, just to highlight in terms of like the 6th bullet here, in terms of which is regarding the energy consumption, details of energy consumed and energy intensity, applicability of PAT scheme to the organization, details of water withdrawn, air emission under scope 1, scope 2 disclosures, waste management. So there is a high probability, yes, the companies may not have data around it to report on this, and that is where it becomes the major challenge in terms of, so starting early on this, identifying what is relevant and then pulling out the relevant data to report, that is what is required here. Similarly, in terms of other requirements of the disclosures which are there, they are very time consuming from a data perspective. And then the second element in terms of which is called something as assurance. So the way we are used to signing reports on the audit reports on the financial parameters, as of now, it is not mandatory in any of the territories to have the report signed under for the non-financial parameters. But it's a matter of time where it will become mandatory in some years in terms of where auditors will be asked to give assurance on the reporting which has been done on non-financial. So if you see companies like in India, like RIL, Reliance Industries, they publish the integrated report, which is assured, means there is a report under which it is assured. So similarly, like Asian Paints, there are multiple examples in India which companies are doing this, and also as well as getting it assured by a third party. So that is another opportunity from the community perspective, which will be there, which will be required for giving assurance on this. Yeah. So that is all from my end. Any questions? Maybe we can take it at the last once we have the moderation session, then we can pick up the questions. Is that okay, Aditi?
Okay, so yeah, of course. So thank you, Piyush, for such a wonderful session. I take this opportunity to propose a vote of thanks to you for taking out time for this webinar session. A big thank you to you for your excellent coverage on the topic and sharing your wonderful insights. For a person like me who does not know much about ESG, its evolution, the KPIs, the acceptance amongst the stakeholder community, also the reporting standards and the BRSR regulation, this session was particularly very helpful. So thank you once again. We are going to proceed with the panel discussion on how ESG is impacting the business and how is the role of CFO changing. And for that, I would request my colleague and friend Mukul to introduce a panelist and moderator for the day. Mukul?
Yeah, hi Aditi. Yes. Am I audible?
Yeah.
Yeah. A very good evening to all of you. I guess, the session I was hearing to Piyush sir and before that, Mr. Shailesh Haribhakti, it was very insightful, and I must, compliment and obviously with regards and respect, should congratulate our chairman, sir, Mr. Manish Gadia, for organizing this kind of session, which is really, as Aditi mentioned, kind of evolutionary for, again, people like us who do not understand too much about, ESG audits and how they are evolving across the globe. So taking this session forward and moving forward with the second part of it, which is Fireside Chat, and we have some amazing panelists and moderator, Mr. Sumit Seth. So I would just take this opportunity to introduce all the eminent panelists for the session, and I was just going through the profiles, and I was just amazed that what kind of experience each one of you is carrying. So I would I would take this opportunity to introduce you. So Mr. Sumit Seth is moderating the panel discussion with our panelists, which are Mr. Anil Rander, C. Abhinav Jain, Mr. Bipin Odhekar, and Ms. Mayurika Chakraborty. So about Sumit sir. Sumit sir is a partner at assurance practice of PwC, and he's leading the complete practice of capital markets and accounting advisory services along with ESG reporting. So he is currently the national technical leader for US GAAP and US GAAS reporting for PW in India. And in this role, he advises the firm and its clients across a wide range of topics. He was previously the national technical leader for IFRS and AS reporting for PW in India and part of PwC's global IFRS accounting consulting services team. His key expertise include securities offering in IPOs in India and overseas markets. And amongst all larger transactions, he is currently also advising technology platform business for its IPO in India. So he's worked extensively across different sectors and different companies in the capital markets. And he is also, he has been member for CII's National Committee on Financial Reporting, ICI's Ind AS Implementation Group, ICI's Ind AS Transition Facilitation Group. And he's been actively, very active in publications and trainings as well, where he's regularly quoted in Indian media on matters relating to corporate financial reporting, and is a regular speaker on matters of professional interest. So I welcome you, Sumit sir. Taking forward with our panelist, CA Abhinav Jain. CA Abhinav Jain is a partner at Gaza Capital and has over 15 years of experience in Indian financial services sector, including private equity, commercial banking and accounting. So he joined the firm in 2008 and is responsible for investor relations, deals execution and overall portfolio management. Prior to Gaza Capital, he was a credit risk analyst at ICICI Bank, and he holds an MBA from ISB Hyderabad. He's also a rank holder chartered accountant and a qualified company secretary. So welcoming you, Abhinav sir. Next panelist is CA Anil Rander, who's CFO of L&T Infotech Services. And in the current role, he manages all financial, legal, secretarial, M&A, internal audit and corporate services. So he's also an integral part of the core team leading towards the growth journey and actively engaged in business strategy and transformation. He carries with him around 30 years of experience in all these areas which I have mentioned earlier, and has worked across industries of information technology, financial services, telecom, and consulting. Again, as mentioned earlier, he is also a qualified chartered accountant, cost accountant, and a company secretary. Moving forward with our next panelist, Mr. Bipin Odhekar, who is the head of sustainability and operational excellence at Marico Limited. So Bipin sir heads sustainability and operational excellence function in Marico, and his professional experience of 22 years span over multiple areas like sustainability, operations, projects, quality, safety, and process excellence. As sustainability head for Marico, he has been instrumental in developing the complete function for the company and has played a key role in creating sustainability pathway for Marico, which includes strategy, targets, and governance mechanisms for disclosure. Apart from professional accountabilities in Marico, Bipin sir is also a member of professional bodies like ASSOCHEM, Greenco, and CII in various capacities. I also welcome you, Bipin sir. And our final panelist, Miss Mayurika, she carries, she is a VP of ESG at Kotak Investment Advisors and carries around 16 plus years of experience in complete designing and implementation of sustainability framework, roadmaps, due diligence and action plans, carbon neutrality programs, water security, and all these functions across different industry segments like FMCG, iron, steel, oil and gas, pulp and paper, telecom, cements, and you name it, and she has worked around all those areas. So currently she's working with Kotak Investment Advisors, and prior to Kotak Investment Advisors, she has been part of various consultancy firms as well as large corporates. To name a few, I would just take names of she began her career at risk advisory services of EY. Then she worked at strategic consulting team of Deloitte, and after spending 8 years in consulting, she joined ITC in corporate EHS. After ITC, she was regional head in Vodafone India Limited in health, safety, well-being, and similar programs like sustainable supply chain, safe retail, behavioral safety, intervention. And just before Kotak Investment Advisors, she was working with JSW Group, where her noteworthy experience was design and implementation of sustainability roadmap for the group, leading carbon neutrality programs, alignment and disclosure as per the task force on climate related financial disclosures. She is a graduate in chemical engineering and a postgraduate in business management. I welcome you, Mayurika ma'am, as well. And with the introduction of all senior members from the profession, I would just ask Sunil sir to, if we can start off with the fireside chat.
Yeah. All right. So thank you very much for the introduction, and again, welcome all the esteemed panelists. We're all looking forward to listening and getting your insights. And before that, I was really enthused by what Mr. Haribhakti said and the passion that she explained. Actually, was quite lovely. And also thanks Piyush for trying to explain the whole large ecosystem of ESG, which we're all learning in a 35-40 minutes session, kind of moving from stakeholders, analysts, ratings and standards, and of course reporting. So thank you for that. So maybe with no further ado, maybe let me start. And I have an easy job to do actually. It's you all who have to teach us and explain to us. So maybe if I may start with Anil first, and Anil, just as you heard, there's so much which is happening on ESG. We are hearing in media, regulation, etc. What is your view in terms of why this is gaining so much of prominence, and what interactions you are having, right, with your stakeholders, I would say, as in today's time. So any thoughts and insights from your side, Anand, on that?
Thanks, Sumit. Thanks for being invited as a panelist. I mean, it's an honor to be a part of this panel, and also with the office bearers. Incidentally, I mean, you really feel great when you are also when personalities like Mr. Haribhakti is there on the panel. And incidentally, I had done my articleship with Haribhakti, so I really feel great to be a part of this panel. Okay, so I mean, a very interesting question, I mean, and recently, if you see, there has been a lot of focus on terms of ESG, which has actually gained momentum quite globally, and we also see, the company's commitment is not only to make profit now, you actually strive towards, what are we doing more towards any kind of a social or environmental causes. That needs to come out very clearly, and you have the multiple interaction with government bodies, consumer, customer, people, and these are related to environmental, social challenges, which could be related to unemployment, poverty, and these require a lot of concentrated effort. And ESG was always there. I mean, it was very passively brewing, but now possibly we see a lot of activism which have come in, and this is really good. Just to give you a few examples, maybe from a governance side, if you've seen, today we read how Vinod Rai has not been selected as an independent director. Siddharth Lal, not selected as a, not appointed as a managing director for Aisha. If you have heard the conference calls for Sun TV, I mean, there was a lot of action in terms of dividend and all. So I think those actions and areas where where we feel that the governance is quite weak has actually started coming up. And end of the day, let's understand the entire ESG piece is also kind of a risk, which needs to be now measured and bring forth before the investors or the shareholders or the stakeholders, whoever are involved in the business, to measure the kind of risk which they are having. And when we speak to a lot of fund houses, they have started measuring in terms of what has been our compliance, or I would say adherence to ESG. What is the kind of focus we are giving? What are the kind of reports which we are publishing? Are there a level of seriousness which is there with the stakeholders? And that is now how they're taking their investment decision, because virtually on these three parameters, they're qualifying this as a risk, and how we are adhering to that risk is something which is now gaining a lot of prominence. So this is going to go ahead. I would say, we are just, I would say ESG from an active perspective just is an evolving stage. I mean, lots to do, lots to come up in terms of reporting or in terms of the guidelines which we will see as we move ahead.
Sure. Thanks, Anil, for that. It's quite helpful. You spoke about governance, and of course, you spoke about the institutional investors, the investment community, and in a way, you alluded that look, there should not be greenwashing. So that kind of gives me a cue to my next panelist, which is Mayurika, and she has transitioned from a manufacturing company like JSW, our traditional business, and now she's on the other side of the investment community and the investment advisory community. So maybe if I could Mayurika, ask you, as you have moved and you've been in this area for now a long time, you've seen two different types of businesses, of course very important businesses from a country's perspective. What do you see as maybe evolution or changes from an ESG perspective, keeping these two sectors in mind? So would love to hear from you, Mayurika, your thoughts on that.
Thank you so much, Sumit, for this question. And I'll just take the opportunity to first thank ICAI and WIRC for inviting me to be a part of a webinar, which began with Mr. Haribhakti stressing upon the need for a gross zero and not net zero only. So I think largely my answer would be driven by that. So I'm one of those rare engineers sitting amongst, a panelist of chartered accountants. And that speaks a lot that we're having this webinar. But coming to more specific experience that I've had in terms of the recent conversations with the investors. So there is increasingly a direct correlation being drawn between ESG and business, because we are finding that negative ESG is directly being equated to financial value erosion. And we are seeing that ESG is looked upon, ESG risks and opportunities are being taken into account so far as overall business decisions are concerned to build a more risk resilient business. And I'm sure, as many of my fellow professionals would agree, that actually there is no variance so far as the awareness on ESG is concerned in the senior leadership or the strategic decision makers of either manufacturing or investment sectors. In fact, I have seen the sustainability framework of manufacturing players nowadays is being largely driven by the increasingly stringent expectations from investors, both national as well as international. Given my personal experience in a conglomerate which is primarily into heavy, which is primarily into heavy industrial manufacturing. So earlier we used to get questions from while we were approaching lenders for loans. A few years back, the queries from the investment community were restricted primarily to financial returns, business continuity risks, environment, health and safety practices, compliance status, and at max maybe certifications related to energy, environment, health, safety, and quality. But over the past 2 years, especially post the pandemic times, there has been a surge in terms of the queries going beyond compliance. So just to give an example, so earlier there was maximum a question on what is the energy profile of the company, how much is the percentage on renewable energy. But now the manufacturing players are having to answer to questions like, which is evolved to the larger subject of climate change. What is the organization's governance framework related to climate change? Is there a specific policy or a committee which is overseeing this subject? And how are we integrating climate change related risks and opportunities in analyzing our return on capital, and even in terms of how are we even taking the value chain along in this whole ESG journey? More importantly, it is not just about what are the practices we are having in place right now, but how are we looking at future? Where do we want to be? Do we have clear-cut targets, time-bound targets in place, which is going to be, how are we going to achieve those targets? People are talking about net zero. We heard Mr. Haribhakti saying gross zero. So yes, there's been a huge transition altogether. And this, in fact, has enabled manufacturing players to, in a way, revisit their own sustainability framework, and even gain access to a lot of international capital. I mean, at JSW, for example, we gained access to international capital through issuance of green bonds. You would have seen more news for JSW Steel now coming up. I would not talk about the organization anymore. I'm not associated with them. But anyways, I still feel that there is one difference between the manufacturing and the investment space, which is primarily the awareness of the operations teams. So rather, because I come from a company which is into asset management and financial advisory. So that's an area that we need to work upon, is to bring up the capacity of the investment teams and the asset management teams, so that they are able to deep dive in the context of investment investments, and how the expected returns can actually be adjusted to account for ESG related risks and opportunities. So that is going to be the key to make this whole ecosystem function more efficiently, or rather, let's say, to have the right degree of ripple effect that we really want to achieve through this entire value chain.
So thanks, Mayurika. That was a pretty nice response. I think very key points you made, ESG risks and opportunities. I think that's important to note. Resiliency of an organization to, of course, deal with that. I think you spoke about capacity building. I think that's a very important, area. And of course, last but not the least, at least what came to me is, access to finance, right? Green bonds, again, an evolving area. So again, thanks for that. And maybe with that, let me move on to Bipin, as from your perspective as Marico, right? And you've been involved in this area now for a period of time. Maybe you can tell us, how you went about this journey of ESG in your organization. And is this really, a one-man job? Does it involve, one task force? Or is it more than that? And how do you kind of get the organization behind this, if at all? So, Bipin, to you.
Thanks, Sumit. First of all, thank you to the organizing team. And I also got an equal, you can say, shock when I just opened my screen and saw everywhere CA written. I'm the only engineer. Now I can understand, Mayurika, how you're feeling and completely empathize with you. But I would like to have all CAs as my friends, because during last 6 years, I realized that if you wanted to grow as a sustainability professional, I think the best friend for yours is a CFO. Because unless CFO is there with you, you just can't quantify things, and then you cannot add value to the business. So I'm happy to be friend of all of you guys, and will always cherish
So
this.
that's why I started my first question with the CFO.
True. Okay, now coming to see what happens when you start in sustainability as a concept in any organization. It has to be a top-led one. There should be a strong conviction at the top management that this is going to be an important area for us if we wanted to progress. And then they have to demonstrate a commitment from their side. So it could be like what we did in Marico is that we started with our MD speaking about sustainability in our annual conferences, where we introduce these things, that there's a sustainability as a new function. We have a policy, there are certain commitments we are going to do. He, in his speech, actually spoke about it. And then he inspired people that you all need to be participative in this area. So there it started, and then after that we created a sustainability committee where there's investor relation team, there's a team member from procurement, there's a member from manufacturing, where we started creating the basic infrastructure about where we need to start off and then how we need to move ahead. So after now 4 to 5 years of good work, now we have reached where the KPIs related to manufacturing, supply chain, finance, HR, all these things are nicely placed, and then there's a clarity about where we wanted to move in these areas. Now, moving ahead as a consumer company, we would like to definitely move as a sustainable product company. And hence now there's a time where we need to start working with our R&D teams and marketing teams so that we establish KPIs in those functions, that what they can add value to overall sustainability of the organization. So this is overall as an integration. It's not about taking initiatives in each function, but the commitment and the policy has to be integrated with each function so that it becomes a normal way of working for them. So if marketing has 3-4 KPIs, they will have one more KPI along with them as a functional KPI. And this integration is going to help rather than a team running sustainability show. There's no team. I said, me is there, and below me there's one more manager. That's all. That's a sustainability team or a function for Marico. But we strongly believe that you have to prepare people and then make them realize that this is one more KPI, which till that time you are following 6-7 KPIs. This is one more KPI for your function, and then probably it will be a normal integration of sustainability concept in the organization, and then it can move ahead.
Thanks. Thanks, Bipin, for that. It takes us to the old saying, you cannot manage something which you cannot measure. So when you set your KPIs for everyone, then hopefully people come together. I think the important other point you made is, look, it's got to be top driven. That communication and the governance around that. I think and these are very important points. Otherwise, it will not get the whole organization together. So thanks for that, Bipin. And let me now move to Abhinav. And Abhinav, of course, he has all the finance. He's in the private equity business. He invests in companies. So again, from Abhinav, from your perspective, I think, of course, you have to look at stewardship of capital, which you are investing. Until now, it's always been around, when you do due diligence, and it's all about governance. But now there's also ES to that. What are your views, and how are you seeing this evolving as you make your investments, in portfolio companies? Abhinav, I think you're on mute. Can you hear him?
No, not able to
No,
hear.
I guess, yeah.
Am I audible now? Yeah.
Yes.
I think the organizer put me on mute. But good evening, everyone. Good to see you all, and welcome. Thank you, everyone, especially WIRC, to organize such an forward-looking event. I mean, in that sense. And the reason why I say this, Sumit, is to answer your question as to, as an investor, what are we doing, and how is ESG driven by the investor world. So let me give you an example. I mean, let me tell you something about Gaja Capital. We typically invest in private companies. A lot of, talk here is about how SEBI is driving listed companies into ESG and how large companies are looking at ESG right now. But at Gaja Capital, we invest typically in companies which are in the revenues range of 75 to 200 crores. And even in companies like this, since 2015, we have been insisting on ESG being a very formally adopted mechanism. So it's no longer a very large company phenomenon. It's no longer only a manufacturing company phenomenon. We don't invest in manufacturing facilities a lot as Gaja Capital, but I've been driving ESG in our investing companies since 2015. When it became very mainstream for us and became part of our core investment due diligence process. And the process is not only pre-investment but also post-investment. And where is it coming from? It's I think primarily right now it is being driven by investors from the Western world. And as you see, the Western world investors, they have all woken up to the perils of governance first. I think governance came in first, social became next, and now more and more climate change. I think so all these three have basically led to a significant drive towards ESG of investors, especially coming from North America and Europe. And these are the investors who ensure that investments by their companies, by their people in the organization are made in companies which are ESG compliant. And that's becoming more and more mainstream. And that's what we are seeing out right now as far as ESG is concerned.
Thanks, Abhinav. I think that's one important, amongst others, important point you make, that it's not just about listed companies. It's not just about manufacturing companies. It's entire, I would say, the array of sectors. It applies to all of them, and also unlisted companies, like you said. So thanks for that, Abhinav. Maybe I'll move on and come to you, Anil. I mean, we understand that your company has recently introduced or come up with an integrated report, and also Piyush had earlier spoken about rating agencies. I think you also have an ESG rating. Can you tell us more about that as to what went into you coming up with an integrated report and your interactions with these rating agencies, and how do you go about that? Because that's also an important part of the ecosystem.
So see, this is, I think, the entire ESG is, it's a journey, and like for LTI has been reporting, ESG progress as a part of the parent, L&T annual and as a part of its annual report, where we had a sustainability report, and we actually started reporting independent sustainability report on various ESG parameters since FY17. And then in FY18 we developed a sustainability framework within LTI, covering various aspects of ESG. What needs to be covered, who will be there responsible, how do we communicate, what is the methodology in which we collate the data, how do you analyze it. I think the framework was kept ready by FY17, FY18. And by FY19, I think through continuous integration or continuous coordination with the internal and the external stakeholders, we developed a sustainability roadmap for 2030, where maybe where the targets were clearly defined for ESG, and we started disclosing it in the same year, and in various areas, like for example, carbon neutral by 2030 and all those things. And in FY 2021 we released our first integrated report, and continue to release our sustainability report. So that's been the entire journey over a period of 5 years, where we have started more on an evolution stage, and got into a full-fledged integrated reporting along with the sustainability report. And in terms of we also the amount of the level of transparency which we have displayed also, that we've received awards from for ESG from the Morgan Stanley index. I think we were ranked among the top 10 by CRISIL in terms of when they covered 225 companies across India. We also ranked third in terms of All Asia Executive Team, which was organized by the institutional investor. So what we have done is, ideally, I mean, clearly what we have said is, when we want to get into any kind of a ranking or any kind of a rating, idea is not to get into a rating or a ranking. That is a derivative. I mean, how well you perform, how well you disclose your performance, how well your sustainability exercise, entire ESG exercise is going on, is something which will actually derive your ranking. And I think that really that focus has put us on the forefront in terms of our performance rather than focusing on the ratings.
Yeah, no, absolutely. And thanks, Anil, for that. And my just two takeaways on that is, of course, like Anil said, they were always doing sustainability reporting from 2018, like he said, and they had a plan in place over time. And finally, this year they've come up with an integrated report. And I think the last comment you made, the endeavor should not be to get the rating. The endeavor should be to do good and hopefully report that, and in a transparent manner. So thanks for that, Anil. Maybe I'll move on, and Mayurika, the next one is for yourself. Again, because of your diverse background, as you see now, which Piyush had put up a slide on different frameworks and standards, and there's like a large ecosystem around that. Do you see any challenges from an investment community, and also you think there are any opportunities, right, for others out here because of this multiplicity of frameworks and standards? Your thoughts on that?
Yeah, thank you for the question, Sumit. So I'm glad that Piyush really covered that standards and frameworks part at length, but then I'll just delve a little more on that to be able to answer to that question. So there are standards for basically identifying what are the material ESG risks for ourselves, and then there are frameworks for reporting, and then there are rating agencies. So we are actually dealing with several layers of, the whole ESG management system and reporting system. I'll talk about the good part of it first, because there are standards which even have sector-specific, guidances to help us identify ESG-related risks and opportunities as well. Clearly, the Sustainability Accounting Standards Board, which has very sector-specific, delineation of risks and opportunities. But then we all know when it is like trying to prepare for one single competitive examination by attending tuitions across multiple institutions. So it becomes it has its own nuances. The biggest problem being it becomes an onerous task for any organization, whoever is, irrespective of where we stand in the value chain of the investment cycle, to kind of put together and in terms of meeting all these standard requirements, we sometimes end up making a very complicated standard. So ultimately, we have to ensure that the investment teams, the asset management teams, and even the investee companies, they have to be able to comprehend the whole scheme of things. So of course, it is an onerous task too. So there is so we really sincerely look forward to the one single standard framework which is expected to come up during the conference of parties to be held in the 26th one, to be held in November 21. We heard Piyush also mentioning that again. So that would really, so with the IFRS Foundation trustees anticipate that this new standard, which will be coming up with better comparability and consistency in terms of application of standards. Having said that, given my current experience that I'm seeing in terms of the way that the European investors as well as the North American investors are looking at things, I'll take the example of the European Union taxonomy, which a few of us would have heard of, which is again a very detailed taxonomy in itself. It's a classification of industries and again classification of projects. It is again it's a part of the EU Green Deal and the regulation they have come up with. So and I'm sure Anil will also agree that there's a push from this fraternity to kind of to abide by this taxonomy. So we have to be ready with India-specific taxonomy, which is more contextual, which is more apt for application in terms of where we stand. We have just started the journey of circular economy, and we are yet to make progress in various areas. So a question like what are your targets in terms of circular economy so far as the renewable energy power plant is concerned is really an onerous task to meet so far as anyone in the value chain is concerned. I gave an example from taxonomy, EU taxonomy. So there's a necessity for an India-specific taxonomy under the umbrella of the SEBI regulations and the stewardship code that has come up with. It would be really good for all the players in this value chain, led by a body like ICAI, to kind of collaborate and create the platform for advocacy with the regulatory authorities.
Well, thank that, Mayurika. You've given homework to ICI and chartered accountants, for that, on that. Clearly, I think the very relevant point you made on this taxonomy, because that's again goes towards the whole, risk of greenwashing, as to are you consistently reporting, is it comparable between companies? So absolutely, I think that's something which, India will also need to look at.
Sorry, you're not audible, Sumit.
I'm so sorry. I meant to say, I was saying thank you, Mayurika, for the homework you've given to the ICI and us chartered accountants, on that is, taxonomy was clearly important. Again, it goes to, minimize the risk of greenwashing and hopefully ensure consistent and comparable reporting So I think that's clearly an important area. And also you mentioned about one single standard. I think that's always an ask from investment community and various stakeholders. So I hope with this ISSB, and there will be hopefully a good end to that one aspect. So thanks for that. Maybe I'll move to Bipin, and Bipin, if you would like to add similarly when you took up reporting in your company and you had to choose between frameworks or standards, how did you go about that? And do you also share a common view of one standard or a mandatory standard? Any thoughts on that from your side, Bipin?
So we are as of now following integrated reporting, and this is the third report we just published it. So I think you can select any framework. Most of the frameworks can give you certain guidelines, but more important is that what is the context of your business, and what are the material issues, and what are the important things you would like to disclose it to the stakeholders. So that is more important. Just I think Mayurika talk about taxonomy. I'll just want to update everybody that Government of India has set up a task force to work upon sustainable financing, and taxonomy is one of the important deliverables. India's taxonomy is one of the deliverables of the task force. Fortunately, I was one of the member of the task force. That's why I'm aware. So some of the work is already done, and probably first draft may be released in another maybe 2 to 3 months of time, I suppose. By March, I think they are looking at releasing it. So I think there's a good work which is going on in India. But see, apart from these standards, there's a lot of gap I foresee as far as India is considered. If you look at total overall industry in India, the listed companies are few companies, but almost 75 to 80% companies are MSMEs or SMEs. And if you go to SMEs, these are the single owner-led companies. You don't have functions and departments in it. So if you wanted to move ahead, all these big companies, even like Marico, we work with hundreds of different people who are having small scale industries or medium scale industries. So it is important that we create simplistic standards so that these people can also follow it. They should be inspired to follow it. The complicated things they may not be interested, and it doesn't move ahead. So that's more important. And then bigger companies also need to have certain methodology through which they carry all their connected people and business associates with them, so that disclosure become very important aspect of doing a business. If you create a transparency about these things, then probably there's a good learning to these people also, and automatically as a country we move towards a better way of working. So I think BRSR, I personally find it's a very good move, because if you start mandatory disclosures in a certain systematic manner for all bigger companies, probably I shared in my task force also that there should be a smaller or a miniature version of BRSR, which should be there, and then it can be applicable to the second level of companies, so that as an industry we should move towards these things. It looks difficult at the start when you initiate it, because you don't have a data architecture when you start doing it. So maybe another 1 or 2 years will take for every company to create that data architecture once you start reporting towards those things. That will probably a key step as a country for a country like India to move forward. The simplistic standard probably an important need for today. That is what I feel.
Yeah. Thanks for that, Bipin, and thanks for sharing with us about this sustainable finance task force and the taxonomy work which is already being done. So that's great to know. And you're right, bringing in the entire ecosystem, even medium companies, small companies, and others, in a simple way, I think absolutely, that would be helpful. So thanks for that. I'll move to Abhinav, and Abhinav, just we have chartered accountants and professionals here, and you spoke about, I think, diligence. Can you tell us a little bit more about how do you really what do you really do in this diligence when you make investments considering ESG? How do you go about it, and is there anyone who helps you with it? Maybe if you can share some thoughts around that.
Sure. So at Gaja Capital, we adhere to IFC performance standards when we kind of look at our companies in ESG evaluation. IFC, International Finance Organization, which is an arm of World Bank, has very elaborate standards on ESG, and they were the initial ones that had come out. Of course, since then, sustainable goals and other matrices have been evolved, but so far we are more on IFC performance standards. And for our work, we typically, in the due diligence stage of any company, engage with an agency. What we have seen in the market right now, these kind of services are provided by two kinds of firms. One is, of course, specialized consulting firms who are formed purely focused on these agencies. These are consulting companies which are focused only on ESG implementation and ESG monitoring. And secondly, we also see a lot of big four and CA firms now offering this as a service in their. So this is where we kind of typically go to on the diligence side. What we have also seen is, post, there is a very large area available for individuals and for people who are willing to kind of make the investment ESG on implementing the measures that are suggested by these agencies. So investors will always recommend a set of measures to do and stuff like that. But then there has to be somebody who's monitoring it on a daily basis, somebody who understands this and works with the CFO. And that's what we are also seeing many of our companies now implementing it. Using their own in-house, CA firms that they have been working with in the past, and people will develop these capabilities to kind of implement this. So this is, as I said, that very growing ecosystem right now, and very important for people to get educated in this. I think, I feel that ESG standards will become as important as accounting standards in the coming years. I think that's how you will see the world moving towards.
Yeah. No, absolutely. Thanks, and that's very encouraging to know, because we have all our chartered accountant friends, and sorry for the engineers over here, but at least that I can say. So there is, that means a big opportunity, like Abhinav said, look, whether it is specialized skills, whether of course the ESG standards, and it is beyond financial reporting, because I think gone are the days when we just say financial statements or financial reporting. Is going to be just reporting, which will encompass both. So thanks for that, Abhinav. Maybe if I can move to Anil, if we are as we are talking about, Abhinav shared his views. Bipin has spoken about it in terms of his organization. Of course, Mayurika has also discussed, these various ways, one would get engaged with this. Anil, what is your view in terms of what professional opportunities, chartered accountants, for example, have, in this area? Anything which you would like to add? What else can they do, and what should they be looking at? When we're discussing ESG and we're talking so much about that, what would your advice be?
Yeah, sure. See, as I think we are speaking on the panel, I think the ESG is again an evolving area, and clearly know that it's gaining a lot of prominence with new guidelines coming in. Like, for example, we had earlier 9 principles based on the market cap, on terms of national voluntary guidelines. Recently in May we had where ESG becomes a part of reporting for the risk committee. Earlier we had CSR spends to be coming within the ambit of the CFO, where the CFO has to certify that the funds have been used for the purposes of the CSR. So we see a lot of governance, a lot of guidelines coming in there, and that is one area where definitely there is a lot of scope for the chartered accountants, and also we have to look at now the environment, the ESG risk. Would be qualifying as, I would say, more of an risk for the business risk, and for making any kind of decision by the management, whether it could be related to your lending, equity investing, or maybe green bonds, and finance will play I would say a pivotal role here, converting those risks, or highlighting those risks and benchmarking in terms of what are the kind of standards which have been used to display the kind of risks which are there. How are they comparable within the industry, with the peers, and then probably it helps the board to take the kind of decisions which will be required.
Yeah. Absolutely. So I hope all our CA friends have listened into that and take some advice on that. Maybe I'll just move on and Bipin, from your perspective, we also heard Mr. Haribhakti talk about data sets and information and data. What is your view on that in terms of he also spoke about an ERP for ESG actually, right? As he was speaking, what is your view in terms of technology and in terms of collecting data, processes, controls around that, and is that something which will differentiate companies going forward?
Yeah. See, you need to understand a very clear fundamental thing in sustainability, that there are two components to it. One is a risk, second is an opportunity, and everything lands between these two things. Now, and it is important that we understand the whole word. It is sustainability within business. So we are very clearly speaking about sustainability within business with the context of opportunity and risks. And then if you look at these things in a one square, then you'll understand that it is important to start quantifying these things. And Anil also spoke about it is important to identify all these things and then try to give a number to it. Then only it makes a business sense. If you wanted to do this and carry out this process, then I'll give a very simple example. Now, we as a company, as a consumer product company, we wanted to say that our products are sustainable in nature. Now, how do you say that your product is sustainable? You again go to ESG, simple thing, what is an environment footprint, what is the social footprint, and what are the governance tools you have for your overall life cycle of the product. Take one example of my single product, it will have 40 ingredients, it will have 20 packaging materials, it probably would have managed by some 70 odd vendors. If you wanted to convert all this data put together, entire life cycle of the product, it will become a humongous task. And then to do that, it is important that whether it is an ERP of SAP or you go for Sophie or Gabby, there are many technological platforms which are available where you can key in your data and try to look at a bigger picture for any particular product. So I think it is important to understand for all friends who are there in the audience. I think all of you guys are going to play a very big role because every opportunity or every risk you have to build scenarios, and all the scenarios are going to be quantified. It takes certain business decisions. That is how it has to be. It has to be driven forward. Now, if you want to build a scenario, every scenario will have multiple variables. Each variables need to be linked to the outcome. And that's the reason you need that technology. If you are very good at numbers, if you are very good at technology, I think you have an added advantage for the company future.
Yeah. Thanks for that, Bipin. Absolutely. I liked what you said. There is risk and opportunity and businesses within that always. And of course, getting the information out and with the appropriate technology and tools. I think there is, of course, an opportunity. Also, I think it's important because, once you start putting out that information, it has to be credible. The CFO, CEO, senior management is responsible for that. So I think it makes it equally important that there is reliability of that information. So again, thanks for that, Bipin. And maybe I'll switch gears and, Mayurika. So we've again spoken about manufacturing companies and, kind of areas around that. But just from a financial services business, on the finance side of it, if a company, has to start this journey, what would your suggestion be? What should they be thinking about? What should they be doing? Maybe some inputs on that. How could they start that journey of theirs?
Right, Sumit. So in order to answer that, I think I'd like to take a cue from what Bipin mentioned just a few minutes back, that the first step of this journey has to be a friendship between the investment teams and whoever is talking about ESG, or so people have to understand the business need for embedding ESG, and it is not just another constraint, but rather a control that we are building into our business to, ensure risk resilience or business continuity. So I think that should be the first step. But on a more, I would say, just to see how the journey can be taken in terms of the first, we need to really put in a right definition for the journey. So where we stand, the first thing is to identify the baseline where we currently stand, where we want to be based on the evolving ecosystem and the stakeholders' expectations. The timelines in terms of where we want to reach there, and also intermittent milestones that we intend to achieve in this whole journey. It is much easier if this whole roadmap is structured on under a robust governance framework, standing on the pillars of an ESG policy, which is and a management system based on accepted international as well as national standards. And when it comes to a policy, there is also a need to have a committee to guide, set goals, and review progress. We also need to define what essentially sustainable finance or responsible investment translates to in our context, in the context of the financial market participant. Whether to begin with a positive or a negative screening. For example, we would only invest in a certain sector which is having positive sustainable development impact, or we would not be investing in a sector which has negative impacts. Typically anything related to coal is now coming under the radar of that negative screening, and all the guidelines like IFC, World Bank, etc., have an exclusion list which asset management companies like us are now following. So whether to begin with that or to integrate ESG into the investment decision making, and then eventually progress to thematic investments, having a certain percentage focus on renewable energy or healthcare or green technology, etc. And then finally evolve into active stewardship. The reason why we need to take this journey is to have the right amount of ripple effect, because there is we heard we heard ex-chairman talking to us about the green hydrogen technology used for generating electricity. Well, we need also investment towards that. So there is a need to have thematic investments focus eventually. And in this entire journey, there are two things which are going to be crucial, of course, following the right evolved standard. Signing the United Nations Principles on Responsible Investment is also going to add leverage, because in 2006, when the UNPRI were launched, there were only 63 investment companies which signed their commitment, and now we can see more than 4,000 financial market participants who are signatories. And throughout this entire journey, it is necessary to build the right degree of awareness amongst the various decision makers, the operations teams, the advisors, as well as the investee companies, so that each one of understand the business sense of embedding ESG. And it's not a control which is additionally being put on, it's not a constraint that we need to overcome.
Yeah. Yeah, no, absolutely. I think you make some very important points, Mayurika. I think what my takeaway was, look, one is putting a ESG filter or a lens when you make investments. Like you said, fossil fuels and companies like those, and then thematic investments means actually actively going and investing in projects, green projects, etc. I think the last point you made about my takeaway, the whole the United Nations Principles on Responsible Investment, the sheer increase in the number of signatories, right? I mean, I remember reading that some $110 trillion of assets, which are now in this kind of under this umbrella. So thanks again for that. I think those are pretty important points. And we are out of time, but my last question to Abhinav is again just kind of moving from what Mayurika was talking about, how they're looking at investment. But once you have made investments, how do you continue to engage with your investee portfolio companies? Do you monitor that? Do you really engage with them? And what kind of engagement is that?
Yes,
with respect to ESG, it's obviously with respect to ESG.
So I think the engagement is very continuous. In fact, it's very formal. It's the next steps and the corrective action plans are put in a written document. They are to be signed by the counterparties, the investee companies that we invest in. And then there is a regular monitoring. Monitoring happens at two levels. There are, I mean, in a very heavy case where there are very specialized measures to be taken, like let's say in a manufacturing plant, you typically outsource the monitoring to a specialized agency. In cases where you know where it's not so heavy in terms of measures to be taken, they are more about manuals, about practices, processes, etc. That's where the board itself has been mandated to kind of, the board of the target company has been mandated to kind of take care of the regular updates on the matter. So so monitoring is very very pertinent. There are reports that the companies have to report back to investors like us, which have to be created by them, and it includes a lot of information, you know, I mean, which is not about their PAT, which is not about their EBITDA, which is not about their revenue. It is about the employment that they generated. It is about you know, the fair employment opportunity that they provide. It is about governance. It is about frauds in the company. It is about internal controls. So a detailed reporting is expected from the company on a periodic basis, you know, once the investment is made by us.
Yeah. Sure. So so Abhinav is asking companies not just how much profit you're making, but how are you making that profit? So I hope you know, everyone is listening into that. So I think with that, I know we are completely off time. We could have continued, you know, this dialogue, and you know, there's a lot to obviously learn from each one of you. But you know, we will have to stop here. If there are any questions, you know, from audience, we will, you know, take it to the panelists and maybe, you know, try and get responses. But it's been a pleasure to interact with each one of you. Like I said, I had an easy task, but it was a good learning for me. And thank you so much, you know, WRC, for also giving me an opportunity to, you know, engage at this forum and, you know, with this fantastic panel. So thank you, and you know, over to WRC colleagues.
The question, please.
Do we have time for questions?
Yes, yes, we can take it forward, sir.
Okay, then maybe I'll just put it out. It's out here. Anyone wants to take it up, please feel free. How do you work towards achieving gross zero carbon footprint on personal level? On personal level, okay, that's a good question. I don't know actually if I can say you know, how do you get to a gross zero carbon on a personal level, but I think there are simple things like you know, someone mentioned about taking a car. You know, can you reduce that? You know, plastics, can you reduce that? Simple things like keeping water on while you're shaving, can you reduce that? You know, so there are some of the things I can think of at a very personal level, but you know, other panelists, please come in and you know, chip in here.
So there's a book called as Bare Necessities. In case someone is interested, you can read that book. Very simple, it's a short book, but it can help you to look into your day-to-day activities and your pattern of or your schedules, and then very simple tips are given. Good book, Bare Necessities is the name of the book. You can go through and then read it. Very good insights in for at personal level.
Yeah, thanks for that, Bipin. Maybe the next is, I believe the risk of greenwashing is very real, especially in the relatively smaller organizations who may not have the resources or know how to manage the ESG obligations. And to transition to a net zero environment, how can we collectively support such organizations to avoid greenwashing? Anyone wants to take it, please feel free.
Can someone elaborate it what exactly, because it's very generic question. If you can pinpoint what or give some context to it, I think it would be easy to answer it, whoever asked it. The support can be given in various ways.
Yeah, I think the question looks like, see, really greenwashing, as I've understood, is the omission of material information, right? And said differently, when we say putting out selective truth, we like to speak about things which are going well, things which are show good progress, but we conveniently miss out on things which are not going so well. I think that's what greenwashing is, and that is, I don't think a small, large organization may not. I don't think we need to necessarily differentiate on that basis. But I think the question, the other part of it, which looks like maybe smaller organizations or relatively smaller organizations, of course, like I think Bipin was mentioning, it's a journey, and the expectation also from larger companies, would be obviously more, because again, for the reasons he mentioned, risk and opportunities, right? Larger companies maybe contribute and are exposed more significantly as opposed to maybe smaller companies. So maybe the expectation also would be lesser. Yeah, and the question on resourcing, I think that's always there's no easy answer for it. You would need some resourcing, and therefore let's see how the regulations also evolve. Right now it is more for listed companies, and slowly it will come along for unlisted companies, maybe larger ones first and then maybe smaller ones. So I think it will be a journey on that, and there will be some, of course, challenges to kind of report on some of that, but everyone will learn, I think. Okay, for the essential indicators in BRSR reporting framework, which are basically data sets, are there any benchmarks? So as to assess where the picture thing. Anyone would like to take the third question? I don't know. Piyush, you're also happy to join in and contribute if you want, but anyone?
Yeah, I'll try to answer the question based on what I've understood. The person would like to understand. See, you're talking about, if you're talking about benchmarking in terms of how good or bad is the performance of my organizations vis-a-vis that of other organizations, we must keep in mind that BRR or BRSR are going to be public disclosures. So that gives us direct access to the information of our peers, our competition. So so we, for example, specific water consumption or specific water intake. I'm giving an environmental example, or in terms of, say, diversity percentage within the board or within the overall workforce in another organization which is my peer. We can actually go through the BRSR to be able to get that information. Having said that, there would be a caveat that the way that if every organization defines even the KPIs, again, largely depends on the company. So there is, somebody understands water consumption, somebody understands the water intake. Diversity is again sometimes defined differently, so we do not know whether what is included or not. So, but nevertheless, we do have the disclosures which are public to kind of replicate.
I'll just add to what Mayurika said. So if you go through the framework, BSR framework, it specifically speaks about certain mandatory things. So there are certain mandatory and there are certain voluntary things. Under voluntary also, there are certain qualitative things and quantitative things. So there's always an option to decide based on the maturity of your organization that what you need to respond. But if you want to respond, mandatory, you have to do it. There is no choice. The rest of the things you can decide how you would like to go about it. And about benchmarking, I think it is sustainability is a subject where it's about how better you can do it. So benchmark has to be with self-past performance. There's no point in doing a benchmark with others. It's not going to help. So I think if you're improving as compared to your last year performance, I think it should be good enough.
Yeah, absolutely, and I think that's a very good point. And also, companies, I mean, what users of these reports would do, like for example, scope 1, scope 2, scope 3 emissions, right? One of the specific KPIs which is there in the BRSR Now, company and company B will report that, but in order to be comparable, they would also have the size of operations, right? I mean, revenue, their quantity sold. So, when you look at that, someone of course will have to do a relative, evaluation. That a company which is selling 100 units, whereas a company which is selling 50. Then we compare the emissions, that kind of obviously relativity, will be formed. So I think as long as companies report it, consistently, that relative evaluation, the users and data providers like analysts, etc., will anyway do it. So thanks for that, Bipin and Mayurika. And the last one is, how to go about looking for job opportunities relating to ESG and sustainability. Most firms prefer to hire MBAs. So this is, anyone, maybe we should have our non-MBA friends talk about that.
Well, I think
non-CA friends, sorry, I mean, yeah, please go ahead.
I'll take a stab on this. I think there needs to be a lot of awareness to be created. For example, I think to just give you a simple example, you have a certification on direct taxation, indirect taxation. I think nothing of that sort probably become more on these ESG. And suddenly we need to create more awareness. What is the content? What is the career roadmap for people also to understand. And I won't say it is more like it could be preference to an MBA because or a CA, but unless that awareness is created and the interest is rekindled within the CA community, you will find more MBAs taking up this job.
Yeah, absolutely. Anyone else?
I'm not a CA. I'm not an MBA also. So, yeah, what I feel is that you require more passion. If you have a passion, then definitely you'll work on your capabilities, and that's the only thing which probably will help you for jobs in sustainability.
Absolutely right. we have been learning on this reading last 6 months. Absolutely right, Bipin. Very well said.
I just add to what Bipin and Anil mentioned. So just to keep you all posted, so there are certification programs which are being run by multiple institutions, NGOs. So we have specific programs under IFC. We do have under UNPRI. You can simply go to their portals, so there is a UNPRI Academy. And increasingly, people are going for certification under these umbrellas. I did mention about the friendship, and Bipin also mentioned the friendship needed between the two communities, without which it cannot really function well. When I just take it to another level, risk-adjusted return on capital. Okay, so while the engineer can give the feed to the fact that yes, if there is no water available in a place that you're going to put up a factory, but how much is it going to really impact your business, and you're doing a financial modeling or you're auditing the numbers at a later point in time, we need the finance people. So clearly it's an area there will be a lot of need for financial professionals as well.
No, absolutely. Thanks for that, Mayurika, and that has drawn my attention again. She said credit risk adjusted
return on
capital, right? And frankly, no one spoke about this, but I want to add, all these climate risks, and we spoke about risks and opportunities, right? I mean, this has a clear impact on financial statements, right? I mean, in terms of different areas, whether it is impairment of assets, whether there are some kind of obligations to restore, etc., etc. So I think clearly there is an opportunity for kind of multi-skill learning in this area. And I think we never stop learning. We may be chartered accountants, but like Bipin said, you have to keep learning, you have to keep reading, and passion. And frankly, it is a very interesting topic. It's a very diverse topic. There's a lot to learn for all of us. So thanks for all of that. So Mukul, should we? How much time do we have? Do we continue, or
maybe if we have some? Yeah, please.
I have a short call. at 7:30.
Sure. So yeah, maybe we can wrap this up if if the session is completed, we can wrap this up. That's completely fine, sir.
Yeah. Okay. I don't know. Okay, I think that's about it then. So again, thank you from my side, and over to WRC, for their closing remarks. And
Sure. So, I'll take this opportunity to thank all of the eminent and, excellent panelists for a very deep dive into ESG. So we started off with, remarks from Shailesh sir about what ESG and what its importance is. And then we demystified ESG as to, it was really one wonderful session where we understood what actually ESG is and, what kind of audits and how is it impacting corporates and how, this is getting involved in the total reporting scope. And amongst the panelists, it was a perfect blend of I've heard everything about from investments to infrastructure related to that, then how it is impacting the overall society, and very much pertinent to what we have seen in the last 2 years, a completely transformational change that we have seen across larger corporates, which would definitely drop down to smaller companies as well, and would provide for larger opportunities. Many thanks to all the participants, WRC, for organizing this event, and all our eminent panelists, Anil sir, Abhinav sir, Bipin sir, Mayurika ma'am, Sumit sir, Piyush sir, and all our coordinators for having this excellent session on ESG. And thank you so much.
Thank you.
Thank you.
Thank you, everyone.
Thank you.
Thanks.
Everyone.
Bye.
Thank you. Have a good evening.
Thank you.
Bye.
Bye.
Bye.